You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which all of you have been mainlining throughout the week. Hope you're having a good trading week out there. Got one more show in the docket for you, unless, of course, you're joining us on the Pro, in which case we'll be back a little bit after this show for a little bit of the old options oddities. If you want a sampling, a taste, a helping of the Pro for yourselves, you don't want your broadcast week to end with volatility views, and who can blame you? It's a fun party that keeps going beyond vol views as well. Only one place to go to kick the tires and light the fires, theoptionsinsider.com/pro. Once you're there, you'll see all the info. Click that join up button. Get your name in the hat for the December Pro Trading Crate. No small thing. I see what goes out in those things. A, they are large, and B, I pay the shipping, so I know what goes out in all those things. And we love to send fun things to all of our Pro members out there. Of course, oddities, great Pro Q&As. Going to get a double dose next week, so be on the lookout for that on the Pro Q&A front, as well as, of course, live streams, live access to this, everything else we do. So you could heckle all of our cohorts here on the network throughout the week, which is always fun. I do it here live on the show, but hey, that's my job. You folks get to do it if you join it on the Pro. TheOptionsInsider.com/pro, the place to go to learn more as we go around the horn and see who's joining us on the old Volatility Views show today. You know, it's been a fun show to do this year, coming in on December already. Man, it's hard to believe the year winding down. It's been a very popular hot seat. Everyone's trying to get in the Vol Views hot seat this year, so it's been a fun rotation of guests. We're going to keep it going. First, as we keep on rolling down to the Southern Volatility Mecca, known as Austin. I'm not sure what he's doing with himself now that RMC has rolled out of his town. What does he have to look forward to? I guess it's this show every week. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. How goes the post-RMC malaise down there in Austin?
Well, I've got volatility views every Friday to keep me excited. So things are going really well. It's been an interesting trading day so far. And you know, a lot of, I think there's a lot to unpack in the market today, so I'm looking forward to today's show.
Should be a fun one indeed, because we are joined by a newcomer, not to the network, but indeed to this program, to Ye Old Volatility Views. You may know him from our Crypto Rundown program. He has made a couple appearances, I do believe, on the old Pro Q&A hot seat as well, but he's been angling for a while to get a crack at all things equity vol. So today is the day, as we are joined by our old friend, Mr. Greg Magadini, now the Director of Derivatives over there at AMBERDATA. Greg, welcome to Volatility Views, sir, for the first time.
Yeah, thank you, Mark. And it's a pleasure to be here with Mark Sebastian as well. I mean, he's someone I've learned a lot throughout my career. So
that's not what you told me on Monday on the crypto rundown. So, you you could be honest here. It's okay. It's just us talking, just a couple of guys talking about vol. Nobody else listening. But Greg, as I mentioned, you've joined us on our crypto show more than once. So some of our listeners may be familiar with you, but I do know that there is a certain subset that just loves to mainline vol views. And hey, we love you all out there. A lot of you pros in the business. I've gone to so many conferences over the years and events, and people come up to me saying, man, I love vol views. It's my Friday coming back from work after the close show, or Saturday when I'm doing whatever I'm doing, lounging around the house or yard work. That's my show. That's my go-to. So I know there is a certain element of the audience that their entry point is vol views. So they may not know you from the other programs. So really quickly at the top of the show, Greg, go ahead and give our vol views audience a bit of an overview of your background in the world of derivatives, as well as what the heck it is you do over there at AMBERDATA.
Yeah, sure. I'd love to. So my background is in proprietary trading. I have about 15 years of trading experience. I was a prop trader at Chopper Trading in Chicago and DRW in Chicago as well. I actually left DRW and started trading my own book full-time for a living. And I built a lot of tools around crypto volatility as I was trading crypto vol on Deribit, as well as trading equity vol and gold and yen vol. And so I started a company called Genesis Vol.
Mid-sentence. Got to get that man on the old updated modern technology known as the internet. All right, listeners, we'll see if we can get him back. Meanwhile, we will keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is lighting up our tapes today and indeed this week out there in the vol space. And as the meatball alluded to, another intriguing one out there today. Of course, non-farms driving the market out there. There may have been some crazy cold-addled, or I should say cold medicine-addled people on the show last week who thought we had non-farms last. I'm not pointing any fingers. I wouldn't possibly call those people out, but I think they have recovered. They are a little bit past their cold medicine-addled brains this week. But of course, a fun one today. The market seems like it's struggling to digest this info today as well, because we're red, then we're green, then we're red, then we're green. Right now, we're back in the green again. The S&P has been flirting around. It actually broke through 4,600 briefly earlier this morning, right after the number. Then it dipped right back down, bounced off 4,580 again, and now looks like we're threatening 4,600 again to the upside. S&P up almost 0.2%. The Dow up about 0.2%, and the Nasdaq up about 0.25%. So we're looking like we're moving in a little bit of lockstep out there right now. That means most of our vol friends kind of treading water. VIX, right before he kicked off the show, was literally unched on the week at a 1270. It's down about 1/10 of a point now at 1260. So it shows you net on the week, not a heck of a lot of vol evolution. Vol coming in a little bit, though. So we were back north of triple digits not too long ago. Now coming back down the other way. Vol at about an 83 right now, puts it about 3 points below where it was this time last year. I do believe we have Mr. Greg back. Greg, can you hear me, sir?
Yes, I am back.
One of these days, we have to get you on the modern technology known as the internet, sir. And I know you love the Alexander Graham Bell stuff, but it's a little bit dated, sir. All right,
Love it.
Finish your thought. Tell our listeners you said you were at a prop firm, then we lost you. Give them a little bit of an overview of your background in the derivative space, and then tell them what's catching your eye out there in the vol market this week.
Yeah, absolutely. So just to kind of finish up, so then I started a vol trading analytics company called Genesis Volatility, focused on crypto vol, and sold that last year to a company called AMBERDATA, and now I run the derivatives business over at AMBERDATA. And early in my career, back in 2011, I met Mr. Meatball on a plane and started a relationship with him and learn a bunch of stuff about trading vol back in the day. Right when I was getting
inauspicious day that must have been. Man, I feel for you, sir. I weep. I still remember the day I met Mark, and I've never been able to shake him since.
Awesome. So yeah, this week, very interesting. Equity vol has been really quiet, but gold exploded on Sunday with $100 price range right at the open. That's a 5% range, high-low range on a 15 vol asset. And then on Thursday, we had a yen blowout, which is a 4% range on a 10 vol asset. And today we have non-farm payroll, the household survey at 3.7 instead of 3.9, and nothing's been able to.
And we lost him again.
Right as it was starting to get interesting. You know, the second he praised you, I knew he wasn't long for the show, Mr. Meatball, because that's just the kid.
It just goes to show you the value of chatting up somebody on a plane. You know, I was literally writing a article for Option Pit, and he looked over at my computer and then started asking me questions. And that started, and then I got a call like 3 years later. He goes, you don't remember meeting me, but I met you on a plane. And then we chatted it up, and I got involved in Genesis Volatility as well. I love what they're doing. It's, you know, what they've really encapsulated is what amounts to the Live Vol Pro of crypto options. It's a really, really neat product, and if you are interested in trading options on Bitcoin or ETH or any of the other names, what they're doing at AMBERDATA is the best analytics out there.
That's a fairly good analogy. I like that. The Live Vol Pro of the crypto derivatives. All right, third time is the charm. Mr. Greg, you are back, sir. I do believe you were mid-yen sentence and we lost you, sir.
My goodness, so sorry. It keeps dropping the call. I don't know why. Okay, so just to finish my thought is, you know, normally when we have big events, vol can be correlated across asset classes because panic is far-reaching, but the vol that we saw in gold on Sunday night and then yen on Thursday, both didn't move the equity markets very much. So I think we're pretty decidedly into sort of as Mark would call it, a zone one regime where vol is going to be low, and I'm looking to sell any sort of pop that we might get next week into the CPI and FOMC, and that's kind of how my thinking is.
I know you're focused a lot on crypto. Obviously, it is your day job out there, but how much time would you say you spend watching things like VIX and all the ETPs we talk about here, all the traditional equity products, Greg?
I would say maybe 15%, 1.5.
Interesting stuff out there, listeners. A lot of data to crunch on the crypto vol side. Of course, hopefully you're listening to this. You've at least dipped a toe in the crypto rundown waters by now. I know we have a lot of crypto natives there. I guess you can call them vol natives on this show. I love to see the two audiences intermingle sometimes because hilarity can ensue. But if you are intrigued by all things crypto vol, we do have a whole show all about that, and it is powered primarily by a lot of Greg's data over there every Monday. If you're listening to the full network, that's why I always say, just get the whole network. It's all there. And you don't have to miss anything. You can pick and choose whatever you want. So if you get in the full network, it's already there. Otherwise, check out the crypto rundown wherever you're getting volatility views, listeners. Mr. Meatball, same question for you. In addition to meeting strangers on a plane, what is catching your eye out there in the vol markets this week?
Yeah, I mean, we're seeing VIX try to make new lows. We're seeing equity vol in the Mag 7 at just incredibly inexpensive levels. You know, we've got the vol ETPs kind of falling out of bed now. I know we're going to dig into the VIX futures curve a little bit more, but the individual equity vol is ridiculously low. I want to get my friend Noel Smith on to talk dispersion, because the dispersion trade is on right now with how cheap some of these equity vols are relative to how they're moving, and how, you know, on a relative sense, expensive index vol is. I know it sounds crazy, but the realized volatility, 10-day realized volatility in the S&P 500 is 666. I didn't make that up. It's literally 6.66%.
That is inauspicious as hell, sir. Quite literally.
That is inauspicious indeed.
But you're ringing the dinner bell there for the folks at the SEBO. They're all about dispersion now. I'm not sure if you heard that. I think you got.
I did hear that. That dispersion future is going to be interesting, but it's a huge trade in option funds right now because it's working and there's some opportunities there. The spread between kind of where equity vol is trading and where index vol is trading is a constant creates really almost daily opportunity.
Speaking of daily opportunities, there's a lot going on in all aspects of the vol space. Before I keep rolling with the equity vol, Greg, really quick, I'd be remiss if I didn't at least ask you at the top of the show. Your day-to-day is, of course, all things crypto volatility, and unless you've been living under a rock lately, you know that there's some vol going on out there in those markets right now. They are very different than what you may be used to out there in the traditional equity world. Listen, you're used to things like VIX and the S&P, so you're used to underlying goes up, vol goes down, and vice versa. Different game completely out there in the crypto space. In fact, when we start to get these rallies, the hodlers are out there. They bid up that call wing. Vol goes up when we rally. So all sorts of crazy things happens out there in the crypto space. We've now seen some interesting juxtapositions as well, Greg, where products like ETH that were traditionally and seemingly structurally more volatile than the bigger assets like Bitcoin suddenly trading at a discount. So there's vol spreading opportunities there. So listeners, even if you don't care at all about crypto, at the end of the day, it has volatility and there is some volume, so you can trade it. And that really, at the end of the day, is all a vol trader needs. So Greg, really quickly here at the top of the show, let's do a quick rundown for the folks of what's really catching your eye. What are some of the cool opportunities right now in the crypto vol space?
Yeah, absolutely. Well, we're starting to get some upside momentum and some upside realized vol. But the spread between realized and implied is really wide around the January expiration. So what we're seeing there is that people are willing to bid up the implied for January in anticipation that we'll get some news around the spot Bitcoin ETF, which will be a huge avenue of vol trading opportunities here in the US in the crypto space. So that'll be pretty exciting. But we're looking at 45-day realized vol, 45% 30-day realized vol, and 57% implied for that January contract. So there's quite a big spread, a 10-point spread. And traders are just willing to pay that because they think, something might happen with the spot Bitcoin ETF. And just to contextualize some of the vol that we saw in the last Q4 rally, which was 2020, we saw vol peak out at 150%. So things can actually really move in the crypto space. No one knows how to price that stuff. And so it's one of those markets that, there's not a large track record or history. There's not someone who's got 30 years experience trading crypto vol. So vol can go pretty crazy. So even though the spread's high right now, we could see some movements in January on the back of the spot ETF.
Speaking of movements in January, I was just joking earlier about the SEBO getting into the dispersion game, but they are getting back in the crypto game, apparently in a big way in January with the return of their Bitcoin futures, different obviously than what they had previously. Those were issued off of the Gemini exchange. These are going to be a very different product from what I hear. But Greg, does that excite you that maybe getting some more traditional derivatives players into the crypto game? I know for a lot of this audience, that may go a long way towards maybe helping to remove some of the stigma of trading crypto vol, Greg.
Yeah, absolutely. I think this is the opening the floodgates to some real volumes in crypto vol. We need U.S. avenues, and so SEBO getting into the game is great. And then all BlackRock, Fidelity, all the people applying for a spot ETF is going to be really good for that too.
And speaking of all things futures, let's get out to the realm of VIX futures, listeners. And surprise, surprise, the front portion of that future taking a bit of a hiatus. Interestingly enough, the DEES and the Jan future both moving in lockstep right now, which is kind of interesting. We've been seeing that a little bit more of late. Probably a little bit of a function, too, of just VIX being at a much lower level than it has been in recent years, where we just see the front future and now the DEES taking the pole position out there down about 0.35 and the Jan future down about exactly 0.35 right now. So not a lot of evolution between the front two futures out there on the vol surface, which is kind of interesting. You don't see that all the time, but it does, again, seem to be a byproduct of these lower VIX levels that we're hanging out right now. Speaking of lower VIX levels, again, nothing sniffing a 20 handle. Let's go all the way out, let's say to August this time of next year. And we're still well shy of a 20 handle, listeners. 18 3/4 is the highest we get on the term structure right now. So intriguing stuff. We were talking for a while earlier this year about the blip that the market was pricing into the end of Q1, beginning of Q2 of next year. And I guess you can say it's slightly there. Vol gets up to about a 17 1/3 in April. So it is higher, obviously, but it's not quite as aggressive as it was, let's say, a few months ago. So a lot to unpack. Mr. Meatball, we will start with you, sir. What is catching your eye out there in the vol surface this week?
Yeah, we're now getting really, we still have almost 2 weeks for VIX expiration, and that December future is just incredibly cheap. It's 13.35, so it's trading at about 80 cents above spot, which to me is, really cheap. They're basically telling us we don't think anything can happen for the next 10 days. January, more normal, trading at about a 2.7 point premium, maybe a little bit low, but nothing crazy. But that December future continues to me to seem, pretty inexpensive.
So that D's future so cheap doesn't leave any opportunities for some cheapy dime puts this week, sir?
I'm looking, and so expiration isn't until the 20th. This is one of those cycles where VIX expires after the regular expiration instead of the normal. There's not a lot of great opportunities out there still. You could put on the 12 half. Here's one for you, Mark. You could put on the 12 half, 12 put 1x2 for about even money. That could make you, so buying the 12.5 once and selling 2 of the 12s. If I could do that for free, paying 20 and selling at a dime, you could talk me into that trade. And I think I could talk you into it too.
Yeah, if you twisted my arm. We don't talk a lot about put 1x2s in VIX too often, but they can be intriguing, especially in times like this. You're right, when there's not a lot else on the table. And even though that D's future is cheap, very rarely you're going to get a nice cheap dime upside call in VIX land, right? It's not the way the product works, listeners. It'd be nice, but if you are going to get it for a dime, it's going to be, somewhere where you don't want to buy it. So unfortunately, that same game that we like to play with the cheapy VIX puts, can't really play that same game on the call side. But intriguing, like I said, I'm trying to remember the last time I did a 1x2 put spread in VIX. It's been quite some time. I may have to explore those waters, especially as we start getting into this seasonally quiet period. You're right, it's a bit of a weird expiration cycle this time, so that may open up some opportunities that would not otherwise present themselves. Mr. Gregg, same question for you, sir. Anything catching your eye out there in the weird, the wild, the wondrous world of the VIX futures term structure, sir?
Yeah, well, actually, just kind of piggyback on Mark, I actually think this December is going to get smoked. I think that the cash VIX is going to be in the 11 handle, call it 1175. And then the VIX future still has a lot of room to go down in that type of scenario. My thinking is really that the big headwind in the market for the past 18 months was really around rates. I think the appetite for duration, especially going into year end with like fund rebalancing and stuff like that, is pretty high. I think the credibility from the Fed in terms of getting inflation under control is pretty high. And if we get any sort of pop into the CPI number next week or FOMC next week, I think it's a great time to put on one of those types of put spreads, maybe a 13-12 put spread or 12.5, 11.5 put spread, something like that. I actually think this thing goes lower.
Are you breathing an 11 handle VIX into existence on my show, sir? How dare you? You know how nervous I get when it starts hitting a 12 handle. I get flashbacks to 2017, the dark years. No one speaks of 2017 on the network for obvious reasons. It was a dark time for anyone who was out there slinging vol, listeners. If you were around in that time, you know what I was talking about. Instead, let's keep on rolling with the show. Let's wash those memories away, listeners. Let's get out to the land of VIX options, see if we can find anything fun out there today, listeners. Spoiler alert, not a heck of a lot of paper on the tape out there today. VIX options right now, 285,000 contracts on the tape, so a bit north of 250,000. That looks more respectable when you can look at it in comparison to the ADV, which is a little bit shy of 650, 649 right now. That's down, it's like down around 50-odd thousand contracts, I believe, this week. So again, it's that time of year, listeners. Usually is a seasonally quiet period. Vol and ADV reflecting volume, I should say, and ADV reflecting that out there right now. We're down about 300,000 contracts from where we were in ADV not too long ago, right around 950. Remember I said at the time, that's probably not sustainable, certainly as we head into the end of the year. And that is indeed the case. Let's go out to the VIX options to see what are the size positions out there in VIX options. First off, if you're doing what the meatball and I were doing, you're just scanning for some cheapy puts to throw in your back pocket for a rainy day, you will be disappointed if you look at the top 10 in VIX options again, because once again, it is all calls all the time. Partly, obviously, reflecting where we are in VIX right now, getting into the low teens. Not a lot of excitement for puts, unless you're a crazy person like Meatball and I looking to may have some fun. Outside of that, most people are looking to the upside in VIX land, and that is reflected in our top 10, which is once again all calls all the time, listeners. How much does it cost to break into the top 10 in VIX right now? It's 218,000 contracts. That gets you all the way to, once again, my favorite strike. This one just makes me smile. I don't know why. It's the March 47 halves. Everyone loves the 47 halves in Jan and March. Why? Why not the 45s? Why not the 50s? Why the 47 halves? Why is that strike draw so much attention? Either way, somebody loves it to the tune of 218,000 contracts. And the number 10 spot, number 9, 219,000 of the D's 25s, the comparatively reasonable D's 25s. Number 8, right back at it, 222,000 of the D's 45s. So here we are. Off to the races again, listeners. Number 7, coming down a little bit, 223,000 of the Jan 28s. Number 6, right back to my favorite strike, 232,000 of the Jan 47 halves. I want to talk to the ball manager who's slinging all these 47 halves. I have some questions for them. Number 5, 263,000 of the Jan 25s. Again, comparatively reasonable. You want reasonable. Here we go. Number 4, 268,000 of the D's 18s. That seems comparatively boring to the rest of all this madness, listeners. Number 3, 322,000 of the D's 40s. There we go. Right back at it again. Number 2, 343,000 of the D's 35s. And kind of splitting the uprights between normal and crazy town, we have our number 1 size VIX position right now, 380,000 of the Jan 26s. I'll leave it up to you whether those are crazy town or normal, maybe a little bit of column A and a little bit of column B. But that's our size position out there in VIX options right now. Let's break down the week. And again, listeners, not exactly a rock'em sock'em robots week out there this week. Today, as we said, not a ton of paper on the tape, 285,000 contracts right now. The big dog, such as it is today, 48,000 of the D16 calls. So some calls lighting it up out there today, followed by 26,000 of the March 17 puts. Interesting. Number 3, 13,000 of the D13 puts. We were just talking about these bad boys, listeners. These are expiring, obviously, on the 20th. You can get all you want of those right now, listeners, for 44 cents. You like that? That a good do, as they say? They're trading 13,000 times today. Number 4, about 10, almost 11,000 of the March 16. So back to some upside in March. And then rounding out the top 5 today, 10,000 and change of the March 16 puts. So it looks like maybe we got a bit of a combo, straddle, something going up out there on the 16 strike in March today. Yesterday, a little bit more paper, but not much, listeners. 393,000. Again, it's been a while since we've seen a full trading day with VIX. Again, we're heading into CPI, so that could keep some people keeping their powder dry, but 393,000, that's pretty light. I mean, it's early December. It's not like we're talking December 22nd or something like that. So you expect a little bit more paper this week. Nonetheless, 393,000 is what we got yesterday. The big dog, though, decent. 45,000 of the March 26s, followed by 45,000 as well of the March 36s. It looks like some March vertical action going up yesterday. Number 3, 27,000 of the D's 13 puts. Number 4, 22,000 of the March 14 half puts. And rounding out the top 5 out there yesterday, almost 21,000 of the February 14 puts. So kind of all over the place yet again, listeners. Interesting stuff. Not a lot of it, but what is going up is kind of interesting. Wednesday, 600K exactly. How often do we say that, listeners? The big dog on Wednesday, 47,000 of the D16 calls. So a lot of fascination on that 16 strike this week, listeners. Followed by number 2, 30,000 of the Jan 16 calls. Once again, 16 strike low. Number 3, 30,000 as well of the Jan 26s. Number 4, 22,000 of the D's 12 puts. And rounding out the top 5 on a decently active Wednesday, and looks like the most active day of the week, given the way today's going, about 21,000 of the D's 20s. Tuesday, again, kind of anemic, 404,000 contracts on the tape. The big dog, 31,000 of the D's 13 puts, followed by number 2, 17,000 of the June 60s, 6 O's. Haven't seen a good 60 strike popping up in a while, but there you go, all the way out to June, listeners. Are you a fan of those? It's like they went up at a 102 volatility. Yes, June 60s. Number 3, 13,000 of the April 30s, so cutting that in half. Number 4, 12,000 of the Feb 40s. Again, we're all over the freaking place. And number 5, 12,000 as well of the Feb 45, so maybe some Feb 25, 40. Vertical action Monday, another, shrug your shoulders kind of day. 412,000 contracts on the tape. The big dog out there, 29,000 of the D's 27s. Number 2, 25,000 of the Jan 26s. Number 3, 20,000 as well of the Feb 13 puts. Once again, some folks seem to be liking that strike. Number 4, 18, almost 19,000 of the Feb 40s. And number 5 on a kind of shrug your shoulders Monday, 15, almost 16,000 of the Jan 35 calls. So I guess if there's one thread throughout this week's paper, listeners, is that there is no thread. You're kind of all over the place. Every strike, every month is doing a little bit of paper out there this week. Mr. Greg, we'll start with you. I know you spend most of your time watching the crypto flows out there, but anything catching your eye in the world of VIX options these days, sir?
Yeah, I mean, basically, kind of how I'm thinking about it right now, the opportunities that I see is that in a low VVIX environment, I'm expecting kind of what I was saying earlier, like if we get any sort of potential pop on top of the next week's announcement, CPI, FOMC, I'm looking for, if the VIX future can get to anything in the 14 handle or high 13s, I don't think we're going to move very much in this type of low VVIX environment. Then I'm looking to buy some sort of put spreads for the December expiration. I think to me, that's kind of what's interesting. I think the market has really showed its hand this week by the non-reaction to the vol events that we had in the other asset classes and the reaction that we've seen post non-farm payroll number, which was better than expected. And so I think really the market has shown itself for the rest of the year. That's how I'm thinking about it.
You know what happens when you whisper it here on Vol Views? It comes to pass in real life. So you have now said an 11 handle. We will have an 11 handle coming up in VIX because you said it on the big show. It's your fault, Greg, at the end of the day. Unless I buy some puts before the end of the show, then you can whisper 11 handles all you want out there. Mr. Meatball, same question for you, sir. Kind of a light week out there on the VIX options front. Anything interesting catching your eye from the complete smorgasbord of strikes that was going up this week?
Yeah, I think the big one was there were some buyers in January. They were buying up like the 1626 call spread. So they're going near the money. So that was our big trade that I caught my eye earlier in the week. And outside of that, not a ton of paper. Let me just double check these strikes. But yeah, there was a 30,000 on Wednesday. They bought 30,000 of the 1626 call spreads. We also saw some December 16 puts going up, a little bit of May on Thursday. Yeah, they were out buying the March 26 36 call spread. That was a big one. So we're starting to see VIX low enough that people are willing to dabble into the long vol space. So that's what I found kind of interesting for this week.
Is that you, listeners? Are you starting to dabble in a little bit of VIX upside? Or are you still snatching your opportunities on some cheapy VIX puts? I'm curious. Hit us up. Let us know as we keep on rolling out there into the once and future Dr. VIX's favorite product, a.k.a. SVIX. I guess I can throw our buddy Mr. Cityall out there too, since he was the one loading up on all those crazy out of the money calls in this name. This is of course SVIX, 35.40 right now, listeners, up about 0.6 of a point from last show. This is once again a new all-time high for this product. So this thing continues to set new highs, and if Greg's prediction of an 11 handle in VIX is to come to pass, then we have not seen the end of the upside here in SVIX out there right now. So interesting stuff out there. Not a ton lighting it up out there today, which is interesting, giving a new all-time high. You think you'd see some more options paper out there. Only about 1,700 contracts on the tape today. The ADV also continuing to move in the wrong direction. After getting respectable, north of 4,000 or 5,000 contracts, it's back down to 2,500 contracts a day now. That puts it down another 600 on the week. So again, I get it. It's seasonally light time, but this is a product that needs to step up some volume so we could, of course, get what everybody wants out there, more strikes, more expirations, and everything else. So it's kind of a chicken before the egg thing. It's kind of hard to get more volume without more offerings out there in the weeklies and everything else, but you want people to start trading, and the volume is going the wrong way right now. So speaking of SVIX options, really quickly, the size position out there, such as it is 18, almost 1900 of the Jan 40s, followed by about 1700 of the Jan 35. So it looks like some Jan vertical action is the top spot. And beyond that, we've got the D's 10 puts, which, spoiler alert, 1600 of those. Don't think those are going to become relevant anytime soon. The big talk, the big debate has been what's going on with the options that SVIX has added to their holdings. We had Dr. VIX on here about a month ago saying, oh, they're adding options. Looks like they're going to be adding put options. We were kind of mulling over what we thought of that in light of it. It's both a plus and a minus. It might impact tracking, but also if you're one of those out there who was worried about SVIX going the way of the dodo, and how could you not be if you were around in 2018, you saw what happened to XIV, then maybe that gives you a little bit of security. I saw more than a few people reaching out to us saying, hey, if they're going to do that, I don't have to hedge my SVIX anymore, which might be a little dangerous thinking, but it could certainly make you sleep at night a little easier, which I guess is a good thing. But Russell sent this in. He wanted to make sure we talked about it in the show. He said, first off, we discovered recently that they weren't buying puts. They're actually buying VIX calls, which kind of surprised a lot of people, but also interesting. They had, I believe they were the D's 27s. They have now rolled those. Russell wrote in to say they've rolled their D's options to January, and they did it on Monday. They rolled them. They had 27,000, I believe. Now they have about 25,500 of the Jan 26s, at least as of this morning. So his guess is they wanted to get it off the week before expiration. Certainly makes some sense out there. But there you go. I don't know, Mr. Greg, if you've been following all this brouhaha around SVIX. XVIX, of course, the inverse VIX product out there. But the notion of them adding options to their holdings, the fact that it is VIX calls, what are your thoughts on that? Do you think that makes you more or less likely to trade the product at the end of the day?
Well, yeah, thanks for asking me. That's a great question. So I remember I was trading during Volmageddon back in February 2018, and XIV completely blew up and went BK. And then SVXY had their moment about a week or two later after Volmageddon, where they chopped the leverage from 1x to 0.5. So that was kind of interesting. And so it makes sense to me that SVIX would buy call options on VIX because when things blow up, not only does the VIX spike higher, but then VVIX spikes higher as well. And then all of a sudden you get a bankruptcy situation for the product. So whether I agree or disagree, I think there's good arguments both ways. It makes the trading the vehicle a little bit different and a little bit more opaque. But I'm curious to see what would happen to put skew, or what's the effect of put skew on SVIX, because now we're sort of taking the potential black swan event that brings SVIX to zero off the table. And so theoretically, the put skew should be a little bit cheaper, and those put wings should come down. So I think there's definitely an opportunity there. I don't know if that's been priced in. I haven't looked at it, but that's how I would think about it, how to capture the narrative around this opportunity.
Yeah, that was mulling that over myself, because people are writing in saying, hey, this takes off my use case for hedging. People debating how they wanted to hedge SVIX, whether going in the VIX calls. To me, it makes total sense if you want to hedge SVIX to go out into the puts, like you were saying, rather than messing around with VIX calls, even though I get it, you can do it that way as well. And I would think it would be cheaper to do it in SVIX, liquidity concerns aside. And that would certainly, I think, be the case now with the demand for those. Maybe going the way of the dodo. I have not looked into put skew. That might be a good conversation, maybe to analyze that for next week, the evolution of the put skew out there in SVIX. If you're one of those people out there, listeners, and you are concerned about SVIX going the way of the dodo, how were you hedging it? Were you going the VIX call route? Again, could be pricey, or are you going the SVIX put route? I'd have to imagine, again, I haven't done the one-to-one analysis. Maybe that'll be, again, a good assignment for next week's show, but I would have to imagine that the SVIX put route probably going to be a little bit more wallet friendly. And also, hey, it's a one-to-one hedge. Can't go wrong with that. at the end of the day. Mr. Meatball, you've had some time to mull this over yourself as well. Where do you fall down on this adding of VIX calls to SVIX? Are you pro it? Are you con it? Does it make you more or less likely to trade SVIX? And also, what are your thoughts on the impact of the put wing, sir?
Well, I just don't understand why they're doing that instead of just doing like an in-the-money put and recreating the future. That would essentially do the same thing. Maybe it's a liquidity thing, but that to me, you could just, if rather than being short future long call, you could kill two birds with one stone and be long in the money put. But I think it makes some sense, and I have not really had a chance to look at the put skew in SVIX, but it definitely makes it a cleaner investment.
Yeah, I think we all assumed when we were first talking about them adding just quote-unquote VIX options, we all assumed it was going to be to the put side, so they threw us all the curveball with that. Man, might be a good question of the week. Again, a little bit in the weeds sometimes, but I know you Vol Views folks love your in-depth questions out there. Does this make you more or less likely to trade SVIX? Might be a good question of the week. Producers, take note as we keep on rolling here with the show. Let's go out to its sibling product, UVIX, which, again, post non-farms taking a drubbing. This has been I won't say interesting product to trade of late, more kind of shrug your shoulders to frustrating, because it's kind of the same pattern now where we're getting not much going on throughout the week, then an event happens at the end of the week and all the juice comes out of UVIX in one day, which I guess it depends how you like it out there. But if you're trying to trade spreads and things out there, it can make it sometimes a little bit challenging. This thing, as we said before, not too long ago, was 30 handles higher. It was at about 46. It's at 16 now. So what a month. They're going to have to reverse split this thing again soon, which, again, we said that when they reverse split it the last time. Why don't you just do a real reverse split? But c'est la vie. Maybe the market will do it for us, listeners. 1640 right now, down almost a full point, about 0.85. Today, looking decent, about 7,000 contracts out on the tape out there in UVIX today. So that looks decent, especially when you see that the ADV is 9,200 contracts a day. So it seems like we're going to hit it. And unlike its sibling SVIX, it's actually moving in the right direction. It's up about 600 handles from this time last week. In terms of the top trades out there right now, the most active contract today, about 1,400 of the D's 17 calls. Oh, that's kind of interesting. Let's look really quickly to see. No, those look like they might be closed. That's what I thought. Okay, if you have calls out there, you're probably not opening them today. You're probably taking them off, and that is the case. Followed by the 15 calls about 400 times. Those are opening. It makes a little more sense. But 17s looks like they're getting out of Dodge on whatever they had left on those bad boys. In terms of top positions out there in UVIX, it's 5,300 of the D's 18s expiring today. So if you were buying those, hoping for some upside vol pop, unfortunately, no. If you're overriding those, you're a little bit of a happier camper. But if you're just straight overwriting upside in UVIX, you don't have anything else against it, you are a braver, perhaps more foolish person than I. Followed by number 2, 4,000 of the 19.5 calls also expiring today. So a lot of near-dated call paper on the tape here in UVIX, which is kind of surprising. Mr. Greg, have you been following the saga that is or at least I should say was, the rampaging beast that was UVIX up at a 46, now a more manageable 1640, but still kind of rocking and rolling. And what are your thoughts on this crazy product, sir?
Yeah, I have been, especially through you guys on Vol Views. So it was interesting. They did that reverse split right when we had the huge meltdown in Vol, and we just cascaded right back down to the 16 handle. So that's pretty interesting. As far as trading this versus UVXY, I still personally prefer UVXY just because it's just more liquid. I'm always a little bit weary of getting into a UVIX position in case I change my mind and then I have trouble getting out. So as far as individual products, for now it's UVXY, but once liquidity picks up more in the options for UVIX, that is definitely the ultimate product for sure.
It is a bit of a roach motel. I can attest to that. They are more than happy to hold the door open for you on the way in. Getting out, a little bit more of a dubious prospect. You got to be a little bit more diligent on the trigger out there. I have experienced that once or twice in UVIX. I keep going out there though. So what does that make me? I guess the definition of insanity. I know when we did our poll recently, UVIX versus UVXY. UVXY ran away with it. So you are far from alone in that thought process there, Greg. I can see the liquidity issues. I guess I'm just a glutton for punishment. I like the better, more effective product at doing what it's supposed to do, even if it is harder for me to capture that because the liquidity isn't there. I can see the trade-off. But I keep beating my head against that wall. It's worked out pretty well. I can't complain. But there have been moments when I shake my fist at the vol gods and I say, why am I using UVIX and not UVX? I can't get out of this damn thing to save my life. So there have been those moments. I do feel your pain. Mr. Meatball, same question for you, sir. Have you been shaking your fist at UVIX recently saying, why can't I get out of this? What are your thoughts on UVIX versus UVXY, an ongoing debate we have on the show here? And anything catching your eye out there in UVIX options this week?
I've not had a lot of trouble getting in and out of things in UVIX. I've been basically using it exclusively. It is a little bit tougher, but if you're just like trading on price, you will eventually get filled. So I don't really have a big issue with UVIX.
There you go. Smooth sailing for the meatball out there. Is it smooth sailing for Mr. Greg's favorite out there, UVXY? Was that about a 960 when we kicked off the show? Down about 0.3 of a point. Down about 0.505 more, about 955 or so right now. So down about 0.35 here on the week. In terms of volume, let's see if other folks are following Greg's lead out there and slinging some UVIX. And the answer is kind of. Got 55,000 contracts on the tape right now. So in terms of liquidity, it's a different ball game than UVIX, obviously. The ADV, though, again, reflecting some of that seasonality, moving in the wrong direction. It's 81,000 contracts a day. That's down 15,000 contracts on the week. So UVXY needs to catch up a little bit out there as well. In terms of size positions, it's all pre-split adjusted. The first non-pre-split adjusted size position we have are the DEES 8 puts expiring. These are just the monthlies, 11,000 of those. So those could come into play by DEES expiration, certainly. We're at about a 9.5 right now. Greg, you said this is your preferred vol ETP out there. What is catching your eye out there in UVXY this week?
Yeah, it is my preferred one. It used to be SVXY, and then I actually caught on that neutering event. I was long some volatility, and then we got neutered on that. So I didn't want to trade a half product anymore. So then UVXY was the next best thing, and then I just kept trading that product. And so it's been quite a few years that I've been trading this product. So yeah, so that's kind of what's interesting. As far as any positions right now that are catching my eye on UVXY, there isn't anything right now that I'm looking at on UVXY. I'm looking at the VIX options themselves for some end of year or December expiration put spreads.
Yeah, I'm with you. I got caught up in that great neutering. I had some nice upside in UVXY, and like you, I said never again in UVXY. That still rubbed me wrong the way that went down. Just changing the product specs mid-cycle overnight like that. You haven't really seen that done too often, and for good reason. It's a terrible thing to do. And yeah, it left a bad taste in my mouth that you have this contract that you bought in good faith and was instantly neutered overnight with no say-so or warning or input from you at all, the customer. It's a bad way to do it. I get it. They had to keep the product alive, I guess, at the end of the day. But still, people like me, I'm not going back to this thing. So, yeah, interesting stuff out there. We are coming up against it. Let's see here. You know what? Really quickly, VXX 1690 when we kicked off the show, down about 0.3 of a point. In terms of volume, 43,000 contracts on the tape today. That looks decent, even though the ADV, again, like everything else in the vol space right now, is coming in 60,000 contracts a day. That's down about 10,000 from this time last week. So everything's taking a hit in the ADV department right now. The big dog position in VXX right now, the DEES 15 puts, those have, again, about a week to go. 35,000 of those. Can we break the 15 handle by this time next week? We're at a 1690 right now. That looks decent, actually, all things considered, listeners. And then we have 18,000 of the 16 puts expiring today. Those seem like they have a bit of might be a bit of a bridge too far. But again, vol is eroding, so maybe we can get there by the end of the session. And it's almost the end of the show, so let's keep on rolling really quickly into a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, where you folks take the reins, your questions or comments. Really quickly, let's get out to our question of the week, which is expiring in a couple of hours, listeners. So if you're listening on the podcast, you're going to be out of luck. Get in there and vote. That's why you need to be following us at Options on Twitter throughout the week. Right now, our question is, it's the final month of the year. Time to break out your crystal ball. First up is volatility. Quite simply, where will VIX close at the end of the year? Gave you 4 ranges: north of 15, 13.5 to about 15, 12 to about 13.5, or below 12. Greg, as our guest, I'll give you first crack, sir. What is your vote, and then where do you think our audience has fallen, sir?
I say below 12, and I think audience, I'm gonna say they say below 12 as well.
Look at you, just putting all that out into the ether. You want that 11 handle in VIX. All right. We'll see. Mr. Meatball, same question for you, sir. Where do you fall? Where do you think our audience is falling?
Well, we got the Federal Reserve next week, so I think you might get a blip up into Wednesday. VIX is currently 1247. I'm going to say it's going to be a touch lower. Let's go with let's go with 1191.
So that puts you in the sub 12 handle for. I think our audience is there as well.
I can't do 1191 because that's not palindromic.
Well, we're not there yet.
What am I going to do here?
We're just doing this.
I'll do 1221.
Okay,
that's better.
You're getting ahead of yourself, but okay. Mr. Meatball we're going to put him in the below 12 category. And right now, listeners, with about 42.9% of the vote, the 12 to 13.5 category is running away with it. Followed by number 2, north of 15. So there are some vol buyers out there, 22.4%. 18.4% saying 13.5 to about 15. And then 16.3% only. So coming in a distant fourth are the Mark and Greg camp of below 12. So interesting. No aggressive vol sellers out there in our audience as well. Again, if you're listening live, you got time to play along. After the fact, probably not. Speaking of listening live, let's get out there really quickly. Greg, we got a question for you. The answer may be seemingly obvious, but I won't put words in your mouth. This question, where I just saw it out there. Who was that? There we go. Options Queen. Options Queen says, does Greg seeing more opportunity in crypto vol or in equity vol right now? Again, Greg, I think I know which way you're leaning, but hey, surprise me.
Yeah, love it. Definitely crypto vol. And I think just fundamentally speaking, crypto vol is an even playing field. Equity vol has people like Mark and Mark who have years of experience that you're trading against, and hedge funds that have a lot of money and capital, and big banks who've been doing this forever. Crypto has almost nobody doing these things. And so the playing field is a lot more even. And so the opportunities and the edges and the mispricings in crypto vol, or the asymmetric pricings, I should say, are a lot more abundant.
The egalitarian nature of crypto vol. There is something to be said for that. If you don't want to try to race Mark and I to the cheap VIX puts, then maybe get out to a little bit of crypto vol. Looks like some of our audience too also saying it's just when vol is this sleepy, we need to provide them with some energy drinks. We've got Option God saying I need to make a vol themed energy drink. That's not the worst idea. We could probably market something like that. Got ZZ313 saying when VIX in the futures are this sleepy, Mark needs to hand out free coffee or coffee vouchers for the audience like us. Just, okay, we'll make sure we do that. We'll send you some Starbucks gift cards out there. Hey, I don't make the vol. I just talk about it here as we keep on rolling right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into The Crystal Ball.
All right, listeners, it's that time. I know it's probably the time that Greg has been dreading all show long. It is where we attempt to wrestle with the volatility gods. And you know what? Our wrestling was not bad last week, not at all. The Rock Lobster, 1249. I'm looking at a 1247 on my machine right now. That's pretty good for him. I was also at a 1235, so if I could just delay for a few seconds and rerun this, I'm sure we'll be at a 1245, and then I would be at a bullseye as well. But we are kind of splitting the uprights right there. But I will definitely give one to the Rock Lobster there. And then Russell was at an 1199. He was a little bit of a bridge too far. I'm just going to run it. Oh, still 1247. Damn it. So close. 0.12 away, listeners. Oh, close. I'm going to put close here. Close, but no cigar. So, because your compatriot got it, Mr. Meatball, I will give you the reflected glow of the victory. Do you want to go first, or do you want to choose somebody else to go first?
Well, we already know what I'm going to guess,
that's
so
right.
I'll go first. 1221.
What was it, 1221?
Yes.
1221. All right. And Mr. Greg, since it's your first time on the show, I will let you go next, sir. What are you feeling for Vol and VIX this time next week?
For VIX, cash VIX, 1197, 11.97.
You're just going to keep beating that horse until it happens. I love it out there. It's not happening fast enough for me. I keep running. I was like, oh, let's keep going. It's still 1247 in VIX. I can't get it to come down. 0.02. It's all I need, Greg. 0.02. All right. You know, I thought it was bad enough when I said a 12 handle on the show last week. I don't like to whisper that into the ether, but I did. And look, it came to pass. So, yeah, we do have Fed next week. The question for this show is always, whatever vol that happens from the events earlier in the week, can it persist through Friday, through showtime, or will it all have come off by then? The way this market is, they seem like they're shucking off all vol. They don't really seem to care for it. So I'm going to say lower. I don't know if again, there's not much room at this point. We're getting so low here. The opportunities to come in and make your own spot on the VIX curve are a little bit lower. All right, fewer and farther between. I got Meatball already at 1221. Greg at 1190. So I was probably going to go somewhere in that range. I hate to have to go lower. All right, I'm going to do it then. I'm going to say 1175. It's a little bit lower than I wanted to go, but I want to give these guys a little bit of breathing room out there on this ever-vanishing VIX totem pole. If you have a guess, get it in the live chat now. If you're listening after the fact, listeners, get your guesses in. Questions at the options. You don't have to be a member. Anybody can guess. It's fun. We all have fun here at the end of the day. And if you get close, within a tenth of a point, you too can win fabulous prizes. Let me just, 1246. So close. So close, listeners. All right. Let's see if I can wait another 30 seconds. Maybe we can get there. Unfortunately, that music means we have run out of time for this week on the old Volatility Views. Mr. Greg, I know you've been a fan of Vol Views for a long time. You want to come on, talk some equity Vol. How was it, sir? Did you have some fun?
Yeah, it was a great time. Thank you so much. I really appreciate it. It was fun to be on with both you guys.
I won't speak for Mark. I know he had some objections, but we overcame them during the show, and we managed to make a fun show out of it. And again, I know you pop up on the Crypto Rundown regularly, but if folks aren't listening there, they want to check out what you're cooking up over there at AMBERDATA. Where should they go? What should they do, sir?
Yeah, absolutely. You can check us out on Twitter. We're at Genesis Vol. If you want to check out our Vol dashboards for crypto, pro.amberdata.io. And then if you want to check out our YouTube channel, it's AMBERDATA Derivatives.
AMBERDATA Derivatives. Yeah, Greg, when he's not talking to me, he's trying to steal my thunder, doing all sorts of podcasts and YouTube shows over there, Mr. Greg. How you like working that mic? Is it fun?
Yeah, it is fun. Absolutely. I got to get you on the podcast, actually.
Well, we might have to make that happen. We shall see out there, sir. But yeah, Greg doing his best hosting impersonations. Check out, they do a lot of content over there. Check them out over there. And of course, you can kick the tires on all their analytics. AMBERDATA.io, the place to go to kick the tires and light the fires. Trust me, there's a lot of stuff there. You want skew, you want OI, you want volume, volatility, what's going on, activity, all that fun stuff. It's all there and a whole bunch more. And Mr. Meatball, if they want to kick the tires on some volatility musings, where should they go? What should they do?
Come to optionpit.com. We're putting out great content every day for you all around volatility and trading. So come and check us out.
Check them out, optionpit.com. That is going to do it for us on the on-demand side. For all of our on-demand listeners, thank you for joining us throughout the week. We will be back again on Monday with the old OB, of course, and our usual array of content, including double pro Q&As next week. So if you're not on the pro yet, might be a good time to treat yourself for the holidays because, of course, you should get in there right now because we are coming back in a little bit for Options Oddities, so your broadcast week doesn't have to end with volatility views. You can come back, see what we're slinging, all sorts of fun going on out there in the world of Options Oddities. That will be in exactly an hour after this program as I try to buy myself a little bit more time. One more time, listener. Let's see if we can get out there. And, 12:45. It made it right at the end of the show, so I am within 1/10 of a point. So you know what? That is my prerogative as the host. I will give myself, because there were so few and far between listeners. When you're that close, you got to get it. So there we go. All right. I was 12:35. It is now 12:04. I was just rambling a little bit there to buy myself some time. There we go, listeners. All right, perfect. Now I can say nana nana boo boo to you on the Rock Lobster. We both got a bullseye. I got a feeling it's going to be happening more as VIX continues to erode. But check it out, theoptionsinsider.com/pro. All that fun stuff. If you missed anything, it's all there. Hundreds, literally hundreds of hours of great pro content exclusively for you folks over there. Then back again on Monday with the old OB all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.